What is up, guys? Tiggy here, and today I wanted to discuss XRP's case against the SEC and the implication on the broader markets. So if you like the content, please like and subscribe and leave a comment in the comment section below. We have a lot to cover today, so let's get right into it. So this morning it was announced that XRP, the US judge, ruled that the token sales that it did on centralized exchanges were not sales of unregistered securities. Predictably, we're just seeing green all across the board, right? Things like Solana, basically in Lido, right? Like the projects that got sued, or like the projects that were deemed securities like a month ago, maybe all the shorts are unwinding, and we're just seeing green pumps all across the board. And I guess what does this actually mean for the broader markets? I'm not going to spend too much time on nitpicking the details of its case. I'll provide some resources in the description below. But basically, right? Whatever equity that Ripple sold to its institutional investors, those were sales of securities. But as long as people bought XRP through an order book, it was not sales of unregistered securities. And overall, a huge win for the space. I think the entire altcoin market was really suffering because there was a lot of uncertainty around are these asset securities? If they are securities, then can people actually buy them? And there was a lot of a gray area there. So I think that uncertainty being lifted is a huge win for the space. I think it's going to be really, really positive for the entire asset class. And I'm pretty hyped. I didn't really predict, all this euphoria happening just because XRP won its case, right? Because I don't really touch XRP, and I'm not really part of that community. But hey, I guess when the SEC is going after everyone, we're all part of the team. I think if you're a US-based team, I think this also is a big moment of relief, because I know for a fact that some US teams were really more careful about building, and it was kind of driving innovation away from the US. But if this is real, which it seems like it's real, and I think crypto innovation can stay in the US, and it's good to see. I feel like moments like today, times like today, it makes me feel proud to be feel proud to be an American, and it's a vote of confidence in the judicial system in the US. But that being said, what does it actually mean? So obviously the talk of the town was Bitcoin dominance. It's going higher and higher. The Bitcoin ETF catalyst narrative was driving this Bitcoin much higher. The narrative was why hold altcoins when they're all securities? Just hold Bitcoin because it's the only form of money. Even Ether might not be even Ether might be a security. But if XRP is not a security, then how can you call any of these securities, right? Ether, really? Uniswap token, governance token, really? If XRP is not a security, then it's going to be really, really hard. And it kind of sets a precedent that let's keep innovation here in the US, and let's not stifle innovation. And I think that's more of the psychological win here, instead of just pumping XRP, for example. But I drew this red box for Bitcoin dominance at the beginning of the year, and I said, hey, I think the max upside for Bitcoin dominance is going to be roughly 50 to 55%. And if it gets in this box, I'm going to convert all my Bitcoin into ETH. And that's what I said earlier. I did that a little bit earlier, just because I wanted to hold more Ether, because I think as collateral on money markets on chain, I think Ether is a better form of money than Bitcoin, at least on chain, right? On L2s, mainnet, Altones, and whatnot. And if anything is gonna at least create a local top in Bitcoin dominance, it's gonna be this news. People are calling for the eternal down only for ETHBTC. To be honest, I don't really believe in the flippening in the next 12 to 18 months. I think it's one of those things that ETHBTC is going to be range bound. Maybe it's going to go a little bit higher, maybe it's going to go a little bit lower. But whenever Bitcoin maxis get euphoric at 0.05, that's probably going to be a good time to buy ETHBTC. Whenever the ETH maxis get too cocky, right, that might be a local top, at least in this ratio. I think this ratio is kind of dumb, to be honest. I get that crypto is very tribalistic, and I get that Bitcoin and Ether, they're both kind of competing to be crypto monies, at least an alternative to the financial markets and whatnot. But I consider Bitcoin and Ether to be completely separate assets, at least in my head as a crypto native. And people arguing about ETHBTC and why you don't want to buy Ether and whatnot. It's kind of you go to the stock market, and then the Apple maxis and the Microsoft maxis are arguing over each other about the Apple Microsoft ratio, and the Apple crowd is hey, like VR is like AR VR is the future, Apple Vision Pro up only, right? Apple dominance up only, and then like the Microsoft Bros are like, oh yeah, like AI is the future, right? And the Microsoft is gonna flip Apple. Like no one's really doing that, right? It's just like this just exists because in crypto, people like are just like part of tribes, and I guess there's like semi-toxic communities that form around these assets. To be honest, I really don't care about the ETHBTC ratio. Of course, I care if it goes like 0.03 or like I care if it goes like 0.12 and like flippins Bitcoin and whatnot. But as like an on-chain native, right? Like I view Ether as a store value. I view Ether as money. I view Ether as pristine collateral. There's the additional added benefit where the loan to value ratio on money markets like Aave. I believe for Ether it's like roughly 80%, and for Bitcoin it's 70 to 75%. I mean that's like that doesn't really like move the needle and whatnot, but whenever I deploy money market strategies, I would much rather use Ether as collateral just because it's more liquid. And like the more you operate on chain, I think it's really hard to not be bullish the ETH-BTC ratio. But that being said, let's kind of talk about like types of narratives that can happen. So I think I've talked about EIP-4844, and I'll talk about like the timeline of that narrative, and generally like how I expect that thing to go, and then also talk about like other L2 tokens. I think Mantle is sort of being slept on, so I'll talk about that. And then I think there's this entire potential narrative around real world assets. The entire Bitcoin, the Bitcoin narrative is driven by BlackRock and Larry Fink, and if you listen to Larry Fink interviews on CNBC, Fox, like whatever, like he's gonna tell, he's been saying the same thing over and over again, about like how he's incredibly bullish on the tokenization of real world assets onto the blockchain, and Larry Fink can create narratives out of thin air, and they can be like multi-month narratives. So I think it's worth keeping an eye on like the RWA asset class, and I guess like how I kind of think about that in like the broader DeFi terms. And now I'll talk about the company that I'm starting out. One of the reasons I've been posting less is because I've been aggressively, maybe not aggressively, I've been like building on a team to build like a research team, and like it'll be completely, like it'll be free and whatnot, so I'll talk about that later. So let's get into the slide deck. I think the L2 narrative is pretty strong. I think in 2021 we had the alt L1 like narrative, and if you were following the channel, right, like that's like all I was doing back then, and I think right now like alt L1 EVM chains are kind of dead just because all these L2s are being funded, and I expect in 2024, maybe even later this year, to just have like alt L2 season where maybe like Arbitrum and Optimism does well, maybe some Mantle, then like a bunch of like other L2s like Linea, like Tyco, like ZK Sync, Starknet, like maybe they start teasing a token, the ecosystem start to get developed, and like maybe they all do tokens, and maybe they repeat like the whole L2 incentive game all over again. And I think as farmers, as on-chain DeFi maxis, it's just something to be aware of. Maybe it's too early, right, to like look into this in July, but we're seeing all like coins moving, like rising tide lifts all boats, and I think it takes time for people to just get rid of their bear market PTSD and like flip bullish. So I just think that the entire crypto asset class has strong tailwinds against it, but I'll talk about, or strong tailwinds for it, but I'll talk about that later. So EIP-4844, I mean, I don't want to keep talking about it, but basically proto-dink sharding, it's going to lower L2 fees. It's going to increase the profitability of these L2 sequencers. So if you kind of view Arbitrum and Optimism as businesses, like you can argue that they're going to make more money, or their margins are going to improve. And from like a user, like end user perspective, it's going to lower the transaction fees by an order of magnitude, like roughly 10 to 20x is like from what I've seen. And this is going to come with the Denkun upgrade happening later this year, and according to the developer Alex Stokes, it was suggested that maybe it's reasonable for this to happen on October 2023. I've been saying for the last couple of months that I think it's going to happen like roughly in November, maybe even December. To be honest, it's really hard to predict like developer timelines, but like EIP, and like these like Ethereum network upgrades, they're typically on schedule, even though at least like the most recent Ethereum network upgrades. So let's just say, right, let's just say mid-November is like a time to expect the Denkun upgrade, which should spur some narrative and growth in these L2s. So yeah, let's just assume mid-November. And I think the narrative that really kickstarted the 2023 like bull market slash recovery year, or whatever you want to call it, was the liquid staking derivative narrative. And if you remember, the Chappelle upgrade, right? The Dave Chappelle upgrade for allowing people to unstake their Ether, that happened in mid-April. But coins, right, like tokens like Lido, went from like $1 to $3 in a span of basically a month, and the narrative really started like January 1st. So Chappelle upgrade mid-April, narrative started January 1st. That was basically like a 3.5 month. It basically like front run like the narrative like roughly 3.5 months. And if you look at the price of Lido, the price peaked roughly 2 months before the upgrade. It was mid-February. So of course, history doesn't repeat, and there's kind of murky things happening here, right? Because you can argue that a bunch of funds sold their Lido for like tax loss harvesting reasons at the end of the year, and then they maybe like rebought exposure, or like maybe like the shorts got squeezed on January 1st, right? So like there's like a timeline there. But let's say maybe maybe the narrative starts 3 to 4 months before the actual upgrade, and then maybe like the narrative peaks like 1 or 2 months before, because if everyone believes in the same narrative, they all buy like 3 months before, then at some point like we're gonna run out of buyers. Of course, if more retail come back, then it can keep going higher. But let's kind of work under this base assumption. So if the Denkun upgrade is gonna be on November 15th, which is my estimate, maybe the narrative picks up around mid Q3, right? Plus or minus a couple weeks, and then like maybe max hype early Q4, and then it could change. Like if a bunch of if ZK Sync drops token, which I don't really expect them to, then yeah, it can get really crazy. But obviously like history does not it's not gonna repeat, but it often rhymes. And you might argue, hey, like why would this narrative happen, right? Like everyone knows about it, like what the hell is this? But I think whenever there are like Ethereum network upgrades, I mean, every single time there's like a network upgrade on Ethereum, it like always leads to like some sort of a narrative. So I would just assume that the same is going to happen. And one I guess trend that I've noticed is that this is the price of OP. I'm not going to look at this price action, because like all these tokens, whenever they drop, they launch at like super high prices for whatever reason, and then it gets nuked. So I'm gonna just view this as the I'm gonna view the price here, which is like roughly $2.15, as the post airdrop top, right? Like post airdrop max hype, and the top happened roughly in mid-August. August of 2022, and then OP just got fairly distributed, right? Because everyone got tokens, everyone has the OP token. At some point, the price goes higher, they're gonna sell. I think people are gonna sell. And from the post airdrop peak to the post airdrop bottom after the peak, it lasted roughly 80 days, right? And then it put on this bullish price action into the beginning of the year, and now we're kind of going down. But I kind of expect this to go much higher, as we go later into the year. And I took this screenshot today, and it's been roughly 85 days since the first airdrop, post airdrop peak, I suppose. And I mean, it put in a lower low, roughly 60 days in at 90 cents. You can't really see it here, but and I feel like there's some level of accumulation happening here, and I think Arbitrum is viewed as a higher quality L2. So if history were to repeat, maybe people that held onto the airdrop because they're bullish, they saw this 2 green candles, they sold, and maybe the airdrop has been pretty well distributed, right? I sold my Arbitrum token airdrop roughly here, and I do not own any anymore, so maybe I'm underexposed, but I'll talk about how I'm being allocated into this narrative later. So let's talk about the pros and cons of both OP and ARB. OP, the base chain is going to launch in 2023, and this was just announced. Base mainnet is now open for builders, not for users. I feel like there's going to be some guardrails in place, but the base, Coinbase is the largest exchange in the US. It's gonna make the onboarding of users a lot very seamless, and maybe there's gonna be some bullishness happening there. WorldCoin, right, is building on OP. I heard they recently raised at a $2 billion valuation. I think publicly they raised at $1 billion valuation, but I heard that they did another round. I mean, don't quote me on this. It's I'm hearing things, but yeah. But so and if you, another thing I forgot to add is, if you think about this trend of more projects, applications becoming app chains, right? And building their own L2 or a roll-up, they're all using the Optimism stack. and not like, Arbitrum or like, other like Avalanche subnets or like Polygon supernets, right? Or like, Cosmos zones. Like they're not really building on those chains. They're like building on top of Optimism. And if you expect a bunch of these app chains to launch, and some of the profits go to the sequencers for OP, then you can argue that there's going to be some future value accrual, at least the narrative alone. The con is that the unlock have started. I think the circulating supply is going to, at the most recent unlock, the circulating supply is like going to double or something. Of course, like I don't really have an edge predicting like whether these insiders are going to sell or not. I think that the team members, like they should sell, right? They're probably selling, but I think the VCs are like not really like selling, at least like from what I've seen. For Arbitrum, I think the best thing is like no unlocks until March 2024, and if you expect this narrative to be something that happens at the end of the year, right, and like peak at the end of the year, then like you don't have to worry about VCs like team members like dumping, and you can argue that there's like a more thriving DeFi ecosystem. There's like arguments against this, right? It's like, yeah, like right now Arbitrum has like a better DeFi ecosystem, and Optimism isn't really there yet, but maybe 6 months from now Optimism is going to have a much more developed like developer ecosystem, because right now on Arbitrum it's like GMX and like random perp dexes, and then people building on top of like GMX, and there's like more activity there. There's like some meme coins pumping, gaming coins pumping, but like maybe it's not really like a purely sustainable like ecosystem. I'm just like giving like the bear case. I'm still like more positive on the Arbitrum DeFi ecosystem than the Optimism ecosystem, but that's one argument against it. I guess cons higher valuation. There's like no real catalyst. They don't have like WorldCoin, base chain, and whatnot. Of course, there could be a possibility, right? Because maybe alongside EIP-4844, or maybe alongside like Q1 of 2024, maybe the Arbitrum DAO is gonna announce like some Arbitrum incentive program where you bridge over to Arbitrum, you use Aave, we'll pay you to borrow, right? And then that kind of accelerates like the velocity of the entire Arbitrum blockchain ecosystem, and then like maybe that's gonna be a way for like a team to like like sell into the hype, right? So there's like catalysts like that happening, and like maybe like DAO selling, and like when I say DAO selling, like like some like Arbitrum DeFi projects got like Arbitrum token airdrops. Some of them have sold. I don't really see them as like a bad thing, but like like they can sell if they want to be honest. And like I mentioned, like it might seem too simple, but everyone cares about Ethereum network upgrades. Like in fact, like that's the only like real important thing happening, right? If you like like maybe that's controversial, but basically everyone cares about it. And if everyone cares about it, if everyone's looking at it, people are going to want to bet on what's going to move. And I think L2s is pretty much in the zeitgeist. Is it priced in? I think it's hard for things like this to be priced in. And if you also expect more retail to come back in the future, especially with like the whole XRP news, then you can argue that like there's going to be buyers like a month from now, 2 months from now, 3 months from now, 4 months from now, right? Like there's always, it's all about capital flows in crypto. So for me, for exposure, I don't own any ARB or OP. I actually am considering a position in OP. I think it's kind of interesting. For Arbitrum, I own GMX, MCV, MUX Protocol. Talked about it before. For OP, I own Pika. They're all kind of underperforming. But like Pika just dropped like a V4 upgrade. I think that's gonna be pretty interesting. MUX, their volumes are going up, and GMX is like leader in the Perplex category. So this is how I'm allocated. I could be wrong on this, to be honest. I'm super. I'm wrong all the time, right? It's part of like what I'm known for. But and of course, big bags of Ether. And I'll talk about like my profit-taking strategies later in the video. So next thing I want to talk about is Mantle. I think it's kind of being slept on, but let's talk about it. So their mainnet's going to launch July 17th, along with a token migration to MNT. So BIT is the current token, the ByBit token, but they're going to rebrand it to Mantle, just so that they're not like too closely tied to the centralized exchange. The dApps are going to be live alongside the mainnet launch, and incentives are going to come, but not immediately. I know the people that are working on Mantle, right? And they said, hey, like we're super excited. We're going to do incentives, not immediately, right? But at some point. So it's something to be aware of. This is kind of technical, but it integrates EigenDA, right, to its data availability layer, which is supposed to offer roughly 70% gas savings relative to its peers. Cool. And it's built on the optimistic world, right? Do you see like a trend? There you go. And they're going to do this token swap. So right now that token is called BIT. Most of it is held by insiders. But according to this governance proposal, 3 billion BIT tokens, roughly a third of the total supply, is not going to be converted to MNT, roughly decreasing the total supply by roughly 33%. So, maybe the valuations become more reasonable. So this doesn't take into account the price pumps of today, but it's like roughly this, right? In terms of like market cap and whatnot. So Mantle, not really cheap by any means, given that it has much less adoption than OP and ARB, but doesn't really, there's also like the potential unlocks, but the team is saying that they're not going to sell. But I think the bet is that it's going to be a new L2. It's going to be cheaper to use. They're closely connected to ByBit, so maybe like if you're bullish on like the base chain because it's connected to the Coinbase, maybe it makes sense like logically, right? Like if you're bullish on base chain, like you should be bullish Mantle, right? Because it's going to make the onboarding process on chain a lot easier, right? And then like new tokens and whatnot. And there's a lot of Binance split happening in ByBit. If you look at like the assets and like the like inflows and whatnot, they are, I guess, slowly taking on more market share. So if you expect a lot of money to be on ByBit right now, and they drop a new L2 that's connected to ByBit, depositing, withdrawing, really easy, super cheap, farming opportunities, then maybe we can see like a repeat of Binance Smart Chain that we saw Q1 of 2021. If you're in the space back then, like that was some crazy stuff. I don't think history is going to repeat like that, but it's something to be aware of. One like crazy thing is that the Mantle team has like $3 billion in the treasury. Of course, $2 billion is in the BIT token, and they're not going to convert like half of this, right? $3 billion. So the real number is like roughly $2 billion, and like half of it's going to be in their own native token. So maybe it's not like real money, but they do have $500 million in Ether, roughly $300 million in stablecoins, and it's going to allow them to seed liquidity on like various applications, right? So it's like if there's like a new money market, like the Mantle DAO can literally just like put like $100 million on the lending side. So if you're using the chain, it's going to be cheaper to borrow, which should increase the velocity of money in the ecosystem, which might mean to like more fees, more yield farming, like whatever. Like all these applications are going to have new tokens. Who knows? I think it could be interesting. They also have a bunch of like these grants, and I think so over 100 protocols are going to launch apparently. So who knows? Maybe that's going to be pretty good. I don't know how high quality these apps are going to be. I've seen some of them; they all feel like cash grabs, but like you never know, right? And like I mentioned, like if you're bullish base chain because it's connected to Coinbase, then like ByBit's also like a pretty big exchange with more money, right? They can actually like pay people. Like, shouldn't you be excited about Mantle? Something to ponder. I guess like from an airdrop farming perspective, I did sign in. They have like this incentivized testnet. They're like a DEX, so all you have to do is connect to the Mantle testnet. And they have guides on the website, so it's like pretty easy. It took me like 2 minutes to do this. Who knows? Maybe I get some tokens. Maybe something you're interested in. So that's the pitch on L2s. I think that's kind of interesting. So let's talk about real world assets and DeFi. Let's hold up. Let's see. Was it this one? Yeah. So let's start with this post first. So something that if you've been keeping track of DeFi coins, this was like a couple weeks ago, but some of them have been like just pumping like mad, and like it's kind of weird to like see like these coins going up a lot because. The last time I saw like double-digit gains on like Aave Uni, Comp, and whatnot, it was like Q1 of 2021, right? Or Q4 of 2020, when it was like just up only, crazy price action. Maybe it's literally like shorts being squeezed, but I also think that there's merits to like think about, okay, like what if this is real, right? Like what if given the SEC lost its case against Ripple, then if XRP is not a security, then like none of these should be securities, right? Which might like get rid of like the regulatory overhang. You might have to price in the future potential of like some of these tokens introducing revenue share, right? Which is like the golden egg, right? Of like what we want these assets to be. Like ultimately, right? Like I want these DeFi tokens to be securities, right? Like I want to be able to buy Uni, stake it, earn like 5% yield, like 10% yield or something from like the fees that they generate, like in the future. And I feel like like easily like these assets can continue going higher. And it was originally led by Maker DAO, and Maker. I think a lot of people hate on Maker because it's like this old DeFi coin. that like bleeds like profusely against Ether. So let's go up here. Let's find the Maker ETH chart. I think I have it here somewhere. Okay, maybe not. So let's Maker ETH. Right. I mean, it's down 4% today, and if you kind of zoom out, right, it's like this. it's literally down only, and this has been like the bear case for altcoins and whatnot. But you know, like I think if you actually look at the fundamentals, they're like actually generating a bunch of money. And if you think about like the narrative that Larry Fink and BlackRock is pushing, they're like, you know, they're gonna go hard into the tokenization of real world assets. BlackRock invested in Circle, right? And Circle, right, like they have a bunch of dollars, they buy treasuries, they make money, and then, you know, like it's a really profitable business. And I think Maker is like a poor man's version of Circle. Of course, everything is on chain. You know, it's basically a bank without like the fractional reserve banking aspect. But if you kind of like just think about it first principles, like, you know, they have a stable coin, right? So and like the dollar is backing the stable coin, like they're buying treasury bonds with it. And if you think that the Fed is going to stay higher for longer with interest rates, then technically, right, like that's going to lead to like higher volumes. And like, sorry, not volumes, like like higher profitability, right? And like the annualized profit right now is like roughly 87 million. The P is like 10, maybe P is like kind of irrelevant. But you know, this is like a protocol that's like probably going to make like $100 million a year, valued at like under $1 billion market cap. You know, like I feel like if you're like an institution like trying to allocate into DeFi, I feel like assets like Maker, Aave, Uniswap becomes a lot more compelling than whatever like some new token that launches with like some anonymous team, right? And I think that's kind of the goal that these teams have, right? Like they are the first movers, they're like the most battle tested, and once, you know, there's more adoption into space, you know, like this can be like, you know, these DeFi 1.0 tokens can be like an index of like the growth of DeFi, right? From a token perspective. And I actually created this new Twitter account called HFAResearch. And I hired a few writers, and we're going to be posting every single day. And one of the first things we dropped this morning, not this morning, on Monday was like this really large, very long form research report on Maker. And you can have, like all the resources are here, so I'll link it in the description. But the goal is, right, it's hard for me to upload videos every single day on YouTube. I mean, like these videos on average take a pretty long time to make. So, you know, like let's try to create like a newsletter. If you go here, you know, I also have a newsletter that just got dropped this morning, the Humble Farmers Digest. It kind of goes over, you know, like the news, things that we're looking out for. I'm not going to spend too much time on this because you can like look at it yourself. But let's see, right? Like, you know, it's like some projects we're watching, some low caps, micro caps, if you're into that stuff. And, you know, also on Tuesdays, once a week, we're also going to do Humble Farms of the Week. So if you want to earn yield on stablecoins, Ether, airdrops, you know, we'll have all the resources here. I think one thing that's interesting is, where is it? Yeah, I think Swell Network is kind of interesting. It's like this new liquid staking derivative token, and they have this on their website where, you know, if you stake your ETH with them, you're gonna get like imaginary tokens for Swell, and once they drop the Swell, it should be like roughly 34% APR on your ETH, which could be pretty interesting. I think they're like extrapolating like the price of the Swell token at like whatever valuation they raised at like previously, so like that could be a bunch of fugazi and like fakeness, but you know, so something, I mean, basically, right, like, you know, feel free to follow this account. You know, like it's all free, right? I just like hired writers to like write for me and whatnot, and I'll be posting every single day on this account. So, you know, if I'm quiet on YouTube and like it feels like I disappeared or like I died, well, like you can like just follow this and then, you know, like there you go. So yeah, Twitter account, posting every day, newsletter, free, and once or twice a week we'll be dropping some threads / like longer form reports. Cool, right? All the link will be in the description below. So let's see. Yeah, and like, you know, wrapping up the topic, right? It's like, you know, when it comes to like DeFi 1.0 tokens, for like a more sustained DeFi bull market, I kind of think like these tokens has to like go up like first, right? It's kind of like, you know, the meme where, you know, Bitcoin dominance goes higher at the beginning of the recovery, and Bitcoin has to go up a lot in order for the wealth effect to be redistributed to altcoins. Well, if you want to convince the market that DeFi is back, then maybe what needs to happen is for I don't know, Maker, Comp, SNX, Uni, Aave, Lido, and maybe even GMX, right? Like these older coins to start really going up. And I guess that's kind of what we're seeing, right? People look at these tokens, they went up a lot, and they're like, wow, is the bid returning? Like, who's buying these assets? And then Arbitrum up 7%, Optimism of 14%. Maybe this is literally the beginning of EIP-4844. I mean, the XRP, right? This news, definitely, if anything's gonna put a top on Bitcoin dominance for the next couple of months, it's gonna be this news. So I think it makes sense to look out for these types of narratives. And ultimately, maybe these market caps are pretty high, but if DeFi is gonna be a $1 trillion asset class, then I think these assets can easily 10x, right? Why can't Aave, the premier bank of crypto, be worth 10 billion, right? I feel like there's all sorts of bear market PTSD, which I want to talk about. And yeah, and one thing so basically this morning, I got an email from YouTube saying, hey Taiki, this is your July update on how your channel is doing. You're doing great. And then I literally got this image of you got 0 new subscribers. I'm like, oh, that's pretty crazy. And I think it's not actually 0. It's actually negative, right? Because this is my metrics for 2023. This is pretty crazy, right? Every time I upload a video, right? These little black play buttons, I lose subscribers. I haven't even uploaded a video in the past 3 weeks, and I still lose subscribers. Where are these people coming from? And I think generally, this, and maybe, it kind of depends how you look at it. If you're a bear, right? If you don't like crypto, you're oh my god, crypto's a scam, no one cares about DeFi, there's not much happening, which is kind of true. And if this is happening, then who's gonna buy your coins? Which I totally do understand. But I think the more optimistic case, and like I said, I lie more on the optimistic spectrum, I guess, when it comes to crypto. But I think it's a signal that once people do come back, we kind of need to let go of our bear market PTSD, because yes, the current meta, the current zeitgeist of the entire market is there's not much new money coming into the space, and if that's what's happening, then it's going to be very PvP, right? Where for me to make money, someone else has to lose money. For someone else to make money, someone else has, it's a zero-sum game. It's actually negative sum if you think about slippage, fees, gas, and whatnot. And I think there was a post, right? There's currently 0 interest. Anecdotally, this is I deal with this too. Normies I talk to think that the sector is uninvestable for the default. And sorry, I think I commented here, but basically, right? I think you can argue that. Oh yeah, sorry. This is this is pure hopium, right? Yeah, retail gone is bullish, retail back is bullish, always bullish. But right now, coins are going up with 0 retail interest, but at some point there's gonna be retail interest. And if money flows back, then you really have to strip yourself off of the bear market BTC, because if there's more interest, more money coming into the space, more attention, then that's going to be just more flows, more eyeballs, more attention, more capital inflows into the space, which should on average just rising tide lifts all boats scenario. So that's kind of where I'm at, right? It's my entire thesis this year, right, that I've been saying is I think 2023 is a recovery year. I think you want to be accumulating assets, make your bets. I'm not really trying to make short-term trades. Sometimes I do, but generally my entire mindset is buy and hold, right? That's kind of my idea. I made a bet on the perp sector. They're doing okay, right? It's probably not going to outperform the hottest coin out there, whatever it is, but I think it's going to be a consistent grower. So my biggest bag is GMX and Ether basically, but holding these assets. And then the question of okay, when do you sell, right? And I think this is what I mean, where the bear market PTSD, I think because nothing has worked for the past 1.5 years, we're just conditioned to take profits, and there's nothing wrong with taking profits. Ultimately, you have to do what's best for you. But I think my mentality, which I've said before, is instead of selling coins that I you know, like I want to hold these coins for the next 12 months, right? Like 6-12 months. Maybe I'll trim here and there, like reallocate and whatnot. But you know, generally they're going to be like longer term holds, right, on average. And if I do feel there's too much euphoria, if I do want to take risk off, you know, this is where the money market strategy comes in, where I've done this before, right? Where I use Ether as collateral. You can use anything as collateral. Then I can borrow an asset that I'm not that bullish on. And I am not like necessarily bullish AVAX, because I think, you know, in this era of, I kind of see a future where like it's going to be like alt L2 season next year. So like these alt L1 EVM chains, I think just has significant headwinds for them, not to mention like unlocks. So what I can do, right, if I want to take profits, is to not sell my Ether, not sell my GMX, not sell like other stuff. It's to like just borrow AVAX and then short it, right? Borrow AVAX, buy GLP. And that's typically what I've been doing. So, you know, if you look at the price of AVAX, it's up 6% today. And let's kind of zoom in here. Yeah, so I drew this red box sometime in June, and I said that, hey, like, you know, when AVAX like enters like this range, whoops, what the heck, if AVAX enters this range, I'm gonna borrow AVAX against my collateral, buy GLP with it, or like buy like other LP tokens with it, and you know, like maybe I pay like 7% to borrow AVAX, but the farm I'm in pays me like 15%, and then I'm like basically being like paid to short an asset. And if AVAX keeps going higher, then to be honest, I don't really care, because if AVAX is trading at like $25, then chances are my Ether and GMX is like much, much higher. So that's kind of the mentality that I have. I was going to say something else, I think. It's been a long video. I kind of forgot what I want to say. What was it? I forget. But it's been, you know, it's been a good day, I suppose. And I don't think this is like a pump that should be sold. If anything, like I think, you know, this is, you know, like this confirmation that, hey, like we're in this recovery year. Like the biggest fear that people had around like our assets being securities, maybe not that big of a fear anymore. And if that regulatory headwind goes away, then, you know, like all the people that sold like alts and like all the coins because like, you know, like they just like didn't believe in them, right? Like, you know, they're all securities, like the government's not gonna let this happen, like whatever, like these bearish narratives people had. I think people are gonna have to slowly shift their mindset. And in the grand scheme of things, right? It's like, you know, if you buy Bitcoin at 30K, if you buy Ether at 2K, like who cares, right? Like maybe it's like, you know, like just zoom out, like this is the weekly chart of ETH, this is the weekly chart of BTC. Like how can you argue that this is like bearish stuff, right? And you know, like we had like a bunch of bad things happen in the latter half of 2022, and we've had a bunch of bad news actually this year, but it seems like, hey, like BlackRock ETF, that's probably happening. Our unregistered securities are not unregistered securities. They're just like coins, and like, hey, like I think that also increases like the perceived upside of these tokens. And if anything, right, even if like the upside of these tokens is like limited from like the actual usage that these projects have, I think what's more important is the shift in the sentiment, shift in the psychology, and it gives people hope that there's light at the end of the tunnel. And I think, right, and I think, you know, as more capital, as more attention comes back into the space, I think you want to be allocated. I think you want to place your bets. I think you want to be more attentive on like what's happening, like what's actually happening, like on chain. Like if you just like, you know, look at the price of maker, like you wouldn't know that this is happening, right? But I think this is like something interesting to keep track of. And yeah, like if you want to daily content, right, feel free to follow HFAResearch. Feel free to subscribe to the newsletter, right? I'm not going to charge for the Twitter and like the newsletter. So yeah, just like wanted to, I guess, offer more resources. Yeah. Anyways, thank you guys for watching. See you guys later. And yeah, bye bye.